Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. Today is Wednesday, December the 7th, 2016. I would like to thank everybody for showing up and for tuning in. This is my webinar for you. WoW Trades. WoW stands for week-over-week trades. A quick note about me, just for you to know who's talking to you. This is very important to know a little bit of the background of the people that is talking to you and trying to give you information on the markets. My name again is Alberto Alvarado. I'm a professional trader based in Mexico City with more than 10 years of experience, actually 11 years in financial trading. I started trading in 2005 with my first live account of $10,000. I lost it in less than 1 month. But after that, I got hooked to the markets, and I realized that I really wanted to take it seriously and to learn by myself all the necessary stuff to try to become a successful trader. And by 2007, I started having my first results on my efforts, just to see my account again evaporate in the financial crisis of 2008. After that, I had to decide to quit or continue. I decided to continue in my trading career with a huge personal price that I had to pay at that moment. And when I decided to continue after the 2008 crisis, what it taught to me was that what I thought was my edge was not complete. So I decided to integrate subjective, intuitional, creative, and creative elements to my trading, and they ended up working very well for me. So what you're going to see here is a combination of that, plus the traditional technical analysis that I use very basic stuff with the default and standard parameters, the MACD, stochastics, RSI, Bollinger Bands, traditional fundamental analysis, reading, trying to keep up with the fundamental news releases. At times when the circumstances justify this, I use what I call fundamental dynamic levels, but I haven't used them for quite a long time now because we have been facing a lot of randomness and volatility due to Brexit, and then after the Trump election, and because of the crisis in the Middle East, Syria, Russia against United States, and United States against Russia. So everything making it's having a huge impact in the markets in terms of volatility. So even the fundamental dynamic levels are not working the way they used to. So that is why I haven't showed them to you lately. But I hope that in the future, when actually Donald Trump gets into power, and if he accomplishes what he said, that is trying to get closer to Russia, what I believe is that what's going to happen is that the world will calm down, and that the markets will tend to react in the traditional way. So then you will see my fundamental dynamic levels show up again. And well, I believe it's pretty much for today, and let's continue. Well, for the ones that haven't subscribed to my YouTube channel, I strongly suggest you to do so because I have one important release today. I don't know if you're aware, but this is my last webinar for this year. So the next time we will meet, it's going to be by mid-January, if I'm not wrong. And let me give you the exact date. Yes, it's January 11th. So for pretty much 1 month, I will be away. But that doesn't mean that the markets will stop and that the opportunities will evaporate and that we couldn't be able to to look for opportunities in the market. So this is going to be the mean where I will deliver my if I see something interesting, a nice trading opportunity maybe arising, etc. I will gladly share it with you. So be sure to subscribe to my YouTube channel. You go to YouTube, and in the search box you type IIIBB's Trading Room channel. This will show up my picture, me myself, and you click subscribe. And if I upload something, you will be able to see in your subscription if I uploaded a video, etc. So, well, today's agenda, it's pretty much that, is try to round this year's experience in delivering webinars and trying to see if we can find any potential setup for the next weeks. Actually, yes, I have one. I will share it with you. It started yesterday, so maybe we are still in good stage to try to analyze it. Before that, well, just to remind you that what I deliver here is they are not trading signals for that. It's just my opinion based on my experience of what is happening in the market. So it's your responsibility to do your personal analysis, etc., and to see if this information delivered here is useful for you or not. I only share my opinion, and that's it. Okay. So, well, let me share my screen. Okay, well, okay, thanks, Shadish. Thanks for confirming. Well, the opportunity I was talking about is in the euro dollar. For the ones following me for long enough, you remember that I've been picturing in my head a potential short opportunity in the euro dollar. After this weekend, as you already know, we have the referendum in Italy, and we have elections in Austria. In Austria, it won the pro-EU candidate by a very small margin, but he won. And in Italy, the referendum was lost by the current prime minister, so he will resign. And that potentially is starting to signal that in Italy, maybe they will request or demand a referendum like the one that happened in the UK. And apparently, if the patterns continue, well, maybe the next one to ask to leave the EU will be Italy. That would be a disaster for Italy. Unfortunately, I believe that because the UK could, at the end, manage to survive and to have good results inside or outside the EU zone. But I don't think that Italy is in the same shape. Italy is still struggling with problems inherited after 2008 crisis. So all this confirmed my my shorting bias on euro dollar. But what it was magnificent, this is the hourly chart. I'm going to show you the daily one. Okay, for the ones following me for long enough, you remember that I stressed a lot this huge spike when we had the surprise Donald Trump election, and then the market started selling off, doing something that I believe it took a lot of time, the euro dollar, to really adapt and react to the reality. For some reason, it stagnated, maybe because of the panic of Brexit. Everybody was selling in the pound at some moment, so maybe they forgot about the euro. But I was sure that at some time the euro should react to a more realistic price, because by no means the valuation of the euro was at 112. It was lower. I was calculating and I was commenting in other webinars that the valuation at that time that I considered was correct was the 106. It took a lot of time to get to that place, as you can see. We just got there like 1 week ago or a week and a half, but we got there. But the thing is that after that we had this surprising, well, not surprising, very predictable now result on the prime minister of Italy, and the reaction of the market was initially a gap to the downside, and then the market sold off to retest these lows and then shoot up. I was at that moment before this candle, this daily candle to close. Maria was more or less waiting for shorting at this stage, more or less at the 108, 109, something like that. But according to the latest price action that I was reading just after the referendum on Sunday, the price action that I was reading was signaling me weakness to the downside. So everything aligned favorably to maybe start considering a shorting opportunity. Because if you see here, this big candle closed pretty much close to the highest levels. And besides, if you review, this level of resistance is here. It's retesting these highs. And we have several layers of continuous resistances from here to above up to the 109. We have this level, we have these levels, we have this level. So that brought me confidence in trying to essay my shorting opportunity that I was foreseeing for, I believe, a month more or less, more than a half, trying to look for something to the downside in the euro dollar. So what made me decide to take a shot now and not wait maybe to get, because I'm going to tell you something. According to this huge spike and this subsequent price action, the real stop loss set level was at 1.13. But after having this recent weekend price action, this weekend referendum in Italy, etc., the price action changed actually in the smaller time frames, and everything aligned because we were retesting, for example, here the candle closed above the mid-Bollinger Band. This Bollinger Band is moving downwards. We have several layers here of resistances. So automatically, the no-brainer stop loss turned from the 113 to the 110. So it was very nice, at least for me, it was something very interesting. The thing is that now, the price action, I'm going to show you the hourly chart in some minutes, because this kind of trade, it's going to be difficult to measure the time window, because since I'm not going to be available for the next month only in my YouTube channel, but I'm going to be on holidays. So even though I'm going to check the markets every day, 1 hour or 2 hours at the most, by no means is the amount of time that I dedicate to trading. So maybe the correct time window of this trade is, let's say, 6 days. But I need to adapt my trade to my next month of holidays. So my challenge in trading a binary option in this trade is exactly that, the time window. Because since I'm not going to be watching this trade every time, if something happens and goes against me, maybe I will notice that 24 hours later and not immediately. So this is the risk that you need to measure. If you decide to, if you think that I could be understanding correctly the markets, and you decide to follow a trade on your own in the direction that you want, you need to measure this in respect of, if you're going to go on holidays, let's say like me, next week, you need to try to fit your time frame in what it works for you, because it makes no sense to open a trade to go on holidays and you will be all stressed every time checking your computer, your phone, your laptop, etc., because you want to see what is happening in the market. So That is precisely what is not meant. You're not meant to do when you go on holidays. So it's a it's a very good choice just to let this trade go and wait for next year. And unless you can find a way to maybe feel comfortable checking 1 hour or 2 hours every day, or every 2 days, your computer, maybe you could consider opening a trade of this specific trade. If you don't, well, just skip this trade and wait for the next year. What I am sure is that in January the volatility should be lower because fortunately things in the Middle East are starting to calm down. The United States didn't have anything else, any other uh, thing to do to step back and to back off from Syria. Uh, and apparently that will give that whole region way more stability. Will end with the refugee crisis maybe in the next 6 to 1 year. So maybe the things are going to calm down. Apparently, Donald Trump has, at least in the speech during his presidential career, he's very willing to restore diplomatic relationships with Russia. So something that I believe it's ultra necessary. It's a complete nonsense. These things that been happening, this propaganda from the Western media against Russia. It's simply cynical. Uh, but well, I'm not going to get into those details because we need to analyze this trade. But the things that what I expect is that maybe next year things will come back a little bit normal. So then we will find way more trading opportunities. So if you don't feel comfortable trading under these circumstances, that maybe I will just be updating. If I update once a week, these next 4 weeks, maybe only 5 minutes, and you can cope with that, and you can manage the trade, deciding whatever direction you decided. Well, maybe you could go for it. If not, just wait for next year. And we will. I am sure that we will find much better opportunities and way more opportunities. So, well, following this line of ideas, after having this very eye-catching movement to the upside, seeing that the MACD, even though just made a crossover to the upside, the RSI it's at the midpoint. I don't like that much that the stochastics is at 80 level, but even though the MACD it's at negative, it's below the zero line. What gave me the confidence is that if we decide to go in the short side of this trade, to sell the euro and to buy the dollar, we are footed in the uncertainty side. That means that if something goes wrong, if something bad happens in Syria, if tensions escalate this next 4 weeks, we are not betting buying euros, taking higher risks. Because at the moment, if something goes out of hand, for example, in Crimea, the things that are going on there, in Ukraine, in Syria, in Libya, in Yemen, all that, if something happened, the market should react negatively, selling euros and buying dollars. So that is why I could rest a little bit calmer these next four weeks in such a trade, because I know that if something unexpectedly bad happens, we are in the right direction. And besides, I see no real reasons to believe that the euro has any kind of potential to the upside, because precisely this weekend referendum, what is signaling us is that the next election trends in Europe is just setting up. We are starting to see that in the next elections that we will have in Europe, we will have a very divided perception on how to understand the European Union membership. So I don't see why anybody could bet, at least now, for the long term in the euro. Now, the same, what we're going to see, it's the same kind of price action that we saw after Brexit, but now in euro. And it took a long time for the pound to try to build the bottom. So this is the same thing that will happen in euro, and in my opinion, it will be even worse. My no-brainer ultimate take profit target in this euro dollar trade is the parity, is a 1.0. Of course, that is very difficult because we have a lot. I mean, the forex markets are anything but easy and anything but predictable. And usually, a lot of things could happen before getting to parity. But what I believe is that considering maybe shorting the euro dollar at these prices, it's a rational thing. It's not going against all odds. So consider if this fits your personality, and if you decide to go to take the counterparty of that trade instead of selling, buying, just don't buy here. Wait for a pullback buy, and maybe if we are wrong shorting it, well, maybe if you decide to go long, you will be correct. But it depends on how you understand all this. Again, I am explaining why, in my understanding, euro will get worse before getting better, any better. So now, with this recent price action, thanks to this huge scandal, the stop loss was immediately reduced to the 1.10. And if it was not enough, a lot of layers of resistances here defending the position, we still have this descending Bollinger Band as a dynamic land in the sand of resistance. So our stop loss should be, or our reference price for start considering maybe to close the trade beforehand, even in losses, is a 1.1 or even lower. I am now holding the position that maybe the stop loss should be above this candle, but it depends on your risk tolerance, and it depends on how often you will be trading these next 4 weeks. But in any case that maybe you will go on holidays and you want to take a break of trading, well, maybe it would make more sense to give the market some more room to breathe. So it depends on this. I mean, and trading during this stage of the year, it's very difficult. So it's up to you. I'm just giving you the insights that I have. So you can manage this in different ways. If you decide to go short, you can use a preventive stop loss here. I mean, opening a binary.com no touch option at these levels above these candles. You need to decide the time frame. What I assume is that if I'm correct, the market should not retest these highs. We'll try to, I don't know if it's slowly or not, continue moving downwards, at least to retest this level, or at least to retest this lower Bollinger Band. If the time passes this Bollinger Band, we'll start moving up maybe to the 106. So at least I expected this trade will test the 106, and maybe let's see what happens. But I really don't see any good reason to believe that this will continue to the upside. I mean, nothing is pointing to that direction. And in any case, that, as you already know, there are no certainties in the markets. In any case, that the market goes against us, well, you could configure according to your risk tolerance, etc., a set of a combo, a set of trades that follow an overall strategy. I'm giving you the clue prices that are above this candle and the 1.10. You can then do your homework and try to figure out what kind of a strategy using those two no-touch binary option trades you can figure out maybe. The first take profit target that I am looking, it's the 106, and from that, if the market really starts for some reason selling off for the next 4 weeks, to start taking different profits at 106, 105, 104, etc., and so on to the party. But it depends on the amount of trades that you decide to take, and you can open a trade, for example, a binary.com option, touch option, in all these levels. So you need to figure out, because it depends a lot on your risk tolerance and your account size and etc. But these are the clue levels that I am giving you. I'm giving you my insights on the overall direction. And in this case, the time window is not based in price action. So that is why I ask you very carefully measure uh, the risks of these trades, because this time frame is based on my holidays, so not in the price action. So if you're going to trade this, maybe it would be a good idea just do your homework, try to find a time frame that you feel comfortable with that maybe doesn't follow my holidays. So that's up to you. Okay, I'm giving you the generals only. If you decide to go to take the counter trade, the counterparty of the trade, take the other direction, you're very welcome to do that. In that case, well, what I would expect is that if we are wrong, we shouldn't. I'm not sure if the market could bounce to the 107 and then maybe shoot up. But maybe what I would believe is that if the downward direction is wrong, maybe the no-brainer stop loss level should be at 106. And again, the next take profit target could be at 109. But remember that here we have a lot of layers of resistance. So don't expect that in any case that we are wrong and actually this continues going up, that this could happen quickly. I mean, following the fundamentals, the state of the things, the uncertainty, geopolitical, fundamental, etc., I wouldn't expect, if we are wrong, that this could shoot up to the sky. Of course not. And all depends, because for the ones that, for the bears that maybe decide to use the 1.1 as the stop loss level, that it's the safest one, that you could manage to hover any kind of circumstantial volatility against us. Even if the market goes to these levels, to the 108.50, 109, it could then bounce back again and continue to retest these levels at 106, 105. So it depends again on your risk tolerance. You need to do your own analysis. So this is what I could call the last trade of the year, at least for me. If you can and you will continue trading these next 4 weeks in a more often way, maybe you could find a lot of trades based on this overall analysis. So I just remember to be careful. We are still living in a very delicate situation in the Middle East, in Syria overall. We are having the major countries, military countries in that place fighting against a group of people, but it would only take something bad, something goes out of hand, and this could escalate and could inject a lot of fear in the markets. And well, that is why shorting this is the safest overall. If you want to take a laid back approach these next 4 weeks, it's the safest because, well, everything is pointing that the most likely thing is that maybe if something's going to happen, it's not going to happen something good. The most likely thing is that if something's going to happen, it's going to happen something that injects uncertainty, and that should be reflected selling the euro. Okay, so that's everything that I have to say on the euro. You need to do your homework, and well, in my case, maybe I would consider a 4-week time window because of my holidays, and well, it depends on you that. The other thing that I want to comment you that we're not going to touch any kind of trade, at least me myself and my live accounts, is on cable. The cable has been, as you can see, after having this huge sell-off after Brexit, etc., and tanking and going and sinking 600 pip in this occasion. If you remember during the webinars, I mentioned that for me this sell-off, this latest sell-off of 600 pip actually was pointing that the market should then try to start moving up, and that's exactly what the market started doing after consolidating some days. And if you compare this trade, this chart against the euro one, well, you can see that lately the pound has been performing very well against the euro, and for the only fact that the euro, it's at times the markets are not perfect timers, At times, some assets take, since the markets are not in a rush, they could take. There's a saying, a motto. I don't remember who said that the markets could stay irrational the much more time that you can remain solvent. So the markets could take their time being volatile, irrational, or not rushing into things for weeks, days, or even years. But at the moment that they realize they are wrong-footed or that they mispriced something, they start immediately reacting. That's what I believe that is happening to the euro. The euro really has no reason, and nobody really has some reason to believe that the euro will, in the short term, see better times. So it depends on how they restructure things and how Brexit, if it happens, how it happens, how soft it is. Apparently, the plan of having a hard Brexit is over completely. I still believe that maybe even we could avoid completely Brexit. That would be difficult, but at least apparently it's going to be a only cosmetic Brexit, in my opinion. So that could even inject more credibility to the eurozone, because that would be a card that all the pro-euro country parties in Europe will have as a political capital to sell the idea to their citizens. You see, even though the UK wanted to leave, they ended up coming back, at least in these aspects, because it has value. So this could inject credibility. It's a strange and contradictory that even having a Brexit, even if it's a soft Brexit, that could inject credibility to the euro. But due to the circumstances, and these very specific circumstances and timing, apparently that could be the effect. So we need to be aware of that. But before that, of course, the markets, in my opinion, will take their time shorting the euro, and the no-brainer price to reset the valuation of the euro is the party. From that moment, we could start considering that, okay, we reset, it's equal having euros and dollars, okay? Now, from now on, let's start rebuilding euros, quotations, and price history. That's my insights. Well, just wanted to show you, this is the daily chart, the pound moving up. We just had this trend line broken these latest days. The price is now retesting these heights, so it's having some sort of hard time to stay there. This is normal. As you can see, even though we have had hard times to continue moving to the upside, the volumes are not the best, but the MACD just crossed above zero line. So in my opinion, I don't expect that this should shoot up to the sky, no, but in any case that this retrace, we have this mid-Bollinger Band lines, and this trend line that was broken as support. So what I believe is that the price shouldn't fall below this price. But since it's a very narrow range, and the worst for the pound just it's over, and we are in a consolidation mode, I don't see any good reasons just to risk opening a trade during this year end. Okay. The other one is the gold. This is the daily gold chart. The only reason I wanted to include the gold analysis, for the ones that have following me for long enough, you know that I am not precisely in love with trading gold because of the price manipulation that happens in this asset. But since at some moment the tensions between in my opinion, American government nonsense of trying to impose their will to the world and to dominate the world, and Russia just saying enough is enough, and they were starting to look at each other's eyes and to measure forces, etc. I was getting really worried about those kind of problems escalating into a very delicate situation. And I, even though I'm not a believer of gold as a safe haven and as a guardian of wealth, but in any kind of extreme situations like a potential confrontation between Russia and the United States, the only thing I know that it's maybe just under that scenario, I would start trusting gold. So as a thermometer, I try to include that into my daily analysis. As you can see, well, gold it's not precisely getting nuts, so this is good because this indicates that well, maybe World War III is not around the corner, at least not yet. So this is the only reason I am using gold to gauge because I believe that the only thing that could indicate us how nervous the markets could get because of that potential confrontation is gold. But apparently nothing important is happening now, so let's just hope that this stays this way because nobody wants this kind of confrontation. Nobody in the world. Okay. So the Brent, after having the OPEC finally getting an agreement on the production, the market shoot up, retesting these heights, and now is taking a hard time to break it. I've been talking to other fellow traders on the potential consequences of holding higher prices of oil. Besides, what I believe is that the prices managed to get very close to the 70 level. We could start seeing signals of recession worldwide. And besides that, that would be, in my opinion, because of a personal analysis that I have, holding very high levels of prices of oil would push the worldwide economy into a global recession. But the least hit by that would be China, because China still uses a lot of coal instead of oil or instead of gas, because coal is way cheaper and of course it pollutes way more. That is why they're having a lot of problems of pollution in China. But again, you know that I love to talk about geostrategy. Okay, so I try to understand. I'm a believer that what you see in the prices in the assets worldwide, they try to make an understanding of everything, not only fundamentals but geopolitics and all this kind of stuff. It is very hard to understand OPEC agreement happening without the collaboration of Russia, because of course Russia is a huge exporter of oil and gas. And even though Russia is not in the OPEC group, actually the Russian helped the OPEC to have this deal done because it was good for oil producers. So Russia took the leadership and it happened. But what I am sure is that at some point, having higher prices of oil, of course, will be beneficial for the oil producers, including Russia. But at some point, if that causes the worldwide economy getting slower, and the least hit could be China because their production relies a lot on coal, what I can be sure is that Russia wouldn't be very happy to see China growing and getting stronger and stronger. So what I believe is that no matter how we will see a lot of interest at the 70 level in any case that we get there to avoid to have the prices of oil above $70 because that would help way more China than the benefits that Russia will start receiving of having more income because of oil. I mean, this is just strategic. I'm not talking about nationalism sentiments. No, this is pure just strategic based on who gets what and how the geostrategic works, the geopolitics works. So understanding that, I see very difficult that oil could retrace. Well, I really don't know how far this could retrace. Maybe it could even retest 50. I see it very difficult, but I see that this will start moving gradually to the 70 level, and maybe in the next 3 months. I am not sure about that because this is pure geostrategic speculation. I mean, the reason I believe that this will continue going up has way more to do with Russia and China relationship that than what it has to do with pure fundamentals of oil. So that is why I'm not going to trade that. It's just my idea. I share it with you. Hope you, independently on your country and your nationalities, etc. I hope that you enjoy this information that I share you, because these are my what I want to believe objective analysis. Okay. Well, the latest one, I've been commenting that of course, I'm in Mexico, I'm Mexican, so I tend to watch Mexican peso closely. It's obvious. I know that this is not the most popular or exotic, most popular currency to trade, but the reason I am looking the Mexican peso, it's because it should be reflecting the real sentiment of the markets about Donald Trump approach on free trade. Uh, just quickly, after Donald Trump accepting Taiwan's, uh, I don't know if it's prime minister or president, to congratulate him to being elected, China reacted negatively because the policy of the United States has been to recognize the only central government of China. And just after this event happening, China actually extended and tended hands to the Mexican government, inviting the Mexican government to get closer relationships with China. So this is again a pure strategic movement, as in, okay, both countries most hit by the rhetorics of Donald Trump during his presidential career was China and Mexico. So now apparently the strategy of China is to take retaliation of this gesture that he had, receiving this Taiwanese President Prime Minister call, and then it's the reaction. I mean, so what I maybe could expect is that this is odd because what you could have expected is that maybe this approachment happened, but derived from the initiative of the Mexican government. Thing that didn't happen. Actually, it was the otherwise, and that was surprising because maybe trying to, of course, if you have a common bully that is bullying you, the most likely is that you will get together with that to defend yourself. But here is what China inviting. So what I believe is that the markets are going to try to start evaluating that maybe it's if it's real that we could have some kind of more deeper collaboration between China and Mexico to counterweight the rhetorics and the policy that Donald Trump wants to follow against China and Mexico. Maybe the markets could read that as, okay, you know what, maybe shorting the Mexican peso has not that much sense anymore. And look at this. We just had that comment here, and just it started selling off. I mean, it's not that much. The volumes didn't go to the sky. You could maybe justify that because we had a crossover to the downside in the MACD, even though it's above the zero line, etc. But my reading is that I am even surprised by this movement of the Mexican peso. So I believe that this is following this logic, China commenting this, etc. So this, as you can see, we still can have a lot of uncertainties for next year, but some other kind of uncertainties, with economic war against China and the United States, but economic war. The thing that was starting to happen in the Middle East is another kind of war. It's not economic. It was a very delicate thing, and it is still a very delicate thing that can happen there. So, but I mean that's unmanageable. You cannot. There is not simple way to trade a conflict between Russia and the United States. There is no simple way to treat that. But when you are talking about a trade war, of course there are tons of ways to profit from that. So we are going to be watching closely to continue watching the Mexican peso as a thermometer, as a proxy of maybe what are going to be the next steps of China. And this goes along with what I was just commenting on oil. At some moment, China would be the most benefited if the prices of oil shoot up to the sky, because even though the coal prices will be drawn to the upside, it won't be in the same proportion. So China would become even the more the prices of oil get higher, the more competitive China will be. because it will continue being the country that will continue offering things at the lowest prices. So we have we're starting to have designed the next year of variables of the strategic that will start coexisting. OPEC with Russia, prices of oil, China maybe trying to get closer to Mexico and other countries in Latin America, while maybe Donald Trump will try to engage into to a trade war against China. So all this will generate tons of opportunities next year. So again, if you don't want to run the risk of opening a trade and maybe for the next 4 weeks, including year end, just wait. We will have way more and better opportunities next year. I would like to thank everybody for showing up, and I would like to thank Charis for hosting as always. I would like to thank you all for being around, for visiting this webinar for this year. I hope that you have enjoyed the content here. We have made good analysis, and overall, what I expect is that the information that I share here helps you to find your own way into this very complex but beautiful trading world and trading experience. And for the ones that celebrate the festivities, this year-end, etc. But well, most of us use this year-end thing to get closer to family, to go on dinner with them, to be together. And I wish you all enjoy these events that at the end they can help to get closer to people that we love, because that is very important. The markets will be there for the rest of maybe humankind, but our loved ones are not going to stay for that long, including us ourselves. So that is why if you simply decide to skip the trade, do it. And it is way better that you enjoy your loved ones these days. And wish you the best for this year end and the best for you all this next year. And remember that we will continue our traditional webinars on January 11th, and I expect you here as always. And I would like to wish you the best for this year end and for the next year. And thanks, Charis, for everything, for hosting. And remember to trade safe, be safe, and bye-bye.